to the Dollar Hour. Happy Thursday, happy Thursday. I'm about to slip for a second. Happy Thursday, everybody. Welcome to the Dollar Hour. I am Deontay Burton, a.k.a. Mr. Short Dollar himself. We got an awesome show planned for you guys tonight. Tonight we're talking about some of the tax law, the new tax law changes for 2024. Each year I do this right before tax season to kind of give you guys the updated tax laws, to let you know what things may have changed for you, good or bad, impact you different ways, and give you strategies, and even discuss and answer questions that you may have in regards to tax law changes that may have occurred for this upcoming tax season. If you didn't know, the IRS officially opens everything up to receive tax returns on this upcoming Monday, January 29th. So it's going to be all the way live for everybody tax season then.
Okay.
So we're going to try to make a little money then.
That's right.
But I just want to have this. Again, I do this every year before it officially starts to give you guys the gist of changes of it and also give you the opportunity to call in. Remember, 678-740-9894. Again, the call-in number is 678-740-9894. And give you the opportunity to ask, different questions you may have had, or, things you may have heard in regards to new tax law change for this 2024 year. Before we get started, I want to say what's up to my house producer, DJ Lab.
What's going on, brothers? Another beautiful rainy Thursday.
Absolutely.
But it was warmer today.
Oh, yeah, man.
It was warmer today.
You don't have a warm weather like that, some cold weather. It's like snow or something going on.
I came out the office from going in this morning and came out the office and I was like, whoa. Okay. I was too overdressed, but I'll take it. We'll take it.
Yeah, it's been some funky weather.
Everybody getting the cold or something going on because everybody's sick. Slick's sick. Everybody's sick.
Shit, I was hurting last week.
Oh, really?
So, I had them sinuses week for last, man, but I'm good to go now. But, yeah, just be careful with the weather and everything. Also, want to say what's up to my other producer, Slick316. What's up, Reek?
What's going on, Reek?
And also got an in-studio guest, my baby boy, Will B.
What's going on, Will?
Hola, everybody.
Hey, y'all ain't seen him through that Spanish one, y'all. He bilingual, bi-coastal, y'all. Y'all don't know about that.
We ain't barely know damn English. Hola, everybody. Hola, everybody.
He nephew Law. He know what's up.
Hey, son.
He know how to hit him with the hola.
Okay. Welcome in here, Will. But yeah, man, I'm really excited to have this show with you guys in regards to talking about the new tax laws because, again, I get phone calls all the time. Hey, man, what's this? What's that? I heard this. I heard that. So right now is the opportunity for you guys to call in. If you do have questions to ask, anything that may have changed, anything that you want to know may be applicable for you this upcoming tax season, call in. Again, we're talking about the new tax changes. I'm about to forget. New tax law changes for 2024. I know what the hell I'm having a brain cramp.
Let me ask you a question. I know you're going to go through the whole list. Does the law that you're about to talk about now, do they apply to personal or do they apply to the business side? Or
either or.
Both, or mix of
either
both?
It just depends on how you file. Because, some things will be with it. So a lot of times what people don't realize when you filing your taxes, especially if you're self-employed as an individual, pretty much the form, everything, especially if you got a single on the LLC, this form filed with your personal taxes on Schedule C. So the information is going to go to that anyway, and it changes. And I think what a lot of times people have, and I think that the thought process a lot of people have is that, when you look at children and child tax credit, earned income credit, there's a dollar value that goes back. But everything is a variance in regards to the actual money you make, how things are capped off or things lowered in and stuff. So what I mean by that is a person with 3 kids that made $20 will have a different earned income credit for a person with 3 kids that made $15.
Okay.
And also somebody that had 3 kids that made $25 or $30. It's not, the credit's still the same, but how it impacts you on your bottom line may be totally different. And I think those are kind of things that people don't know. Because I heard you can get this, I heard you can get that. Well, I'm glad you heard.
Right.
But that's not necessarily the case with a lot of things. But that's why we want to have conversations like we're having tonight, to be able to, answer people's questions, give people opportunity to ask, and also, put in your comments and everything. Again, we're talking about tax law change for 2024. Call in, free to call in, everybody, 678-740-9894. You got to ask something?
Yeah, I'm going to ask one more question so people can understand. How long you say you been you been doing tax? You been a CPA? You got how many degrees?
Ain't,
Because
ain't
we don't
CPA, I'm an accountant.
accountant, whatever. Oh, that's higher than a CPA. That's an accountant. That means he got some letters behind his name from his degrees. I just want people to understand that you have not. This is something that really needs to be listened to and understood. That you didn't just start doing taxes yesterday. Like, because people always start tax prepared. They want to be tax preparers right around tax season, and then they stop. They go to their regular job. They're 9 to 5 after tax season over. I want people to understand that you have been doing this, and this is what you do.
Well, one of the biggest things I think, and I appreciate that, lad. One of the biggest things I think people need to understand is just because somebody tell you what you want to hear don't mean they're right.
Mm-hmm.
And I think far too often people go to a tax preparer to get their taxes done, and they base everything on how much money they're getting back.
Right.
And, what the tax preparer tell them.
Mm-hmm.
They don't necessarily know if anything is fraudulent, anything is missing, and things like that. And, I ain't gonna lie to you, I ain't the cheap tax man.
Right.
But I'm the good tax guy.
Mm-hmm.
So at the end of the day, I'm gonna stand behind my work. That's what we do. If something is correct, something comes back, I'm gonna be there to take care of it.
Mm-hmm.
I ain't the one that's sitting there, a little closet once a year, just filing your taxes and, everybody sitting there clapping because they got a certain amount of money back. Guys, you do not want to play with the IRS. You want to play with anything that you have that's sensitive, i.e. your social security number, i.e. your children's social security number, i.e. your bank account number, i.e. your address. A lot of sensitive information shared with a person that's doing your taxes.
Right.
And do you really, really want to deal with somebody that actually is going to charge you the least amount of money or give you a story about I can get you a certain amount back?
Mm-hmm.
Those kind of things got to be really taken into consideration when you're dealing with this kind of stuff. Because that amount of money, whatever that somebody can promise you, may not be worth it in the grand scheme of things. If something goes haywire, your identity gets stolen. Somebody done got into your bank account. And and these are not like exceptional horror stories.
Right.
Every year we get people coming in, especially new clients. They got dependents. We put the dependents on the return. We send them to the IRS. It gets kicked back because that Social Security number for that dependent been claimed by somebody else. And people like, I don't know where it is. I don't know. Well, you just got to figure it out. We know right now you can't use it. Somebody else already used it. And it happens all the time because people made decisions to go to people or put themselves in situations. Probably wouldn't be probably not the wisest to do. Now, anybody can have things happen to them. I don't think no one makes mistakes on purpose, right? But I do think a lot of things could be avoided if people do a little more due diligence. Take the time and don't be so concerned with the end result.
It surprises me, and probably surprised you too, how willing people are willing to give over sensitive information such as what you spoke of. Because they go get a certain amount of money. It's like the security of that information goes out the window when you say, well, I'm going to get you $20,000 back. You get what I'm saying? Like, hand it over.
Well, I seen the damn thing.
Right.
Well, with doing it. That's one of the things I quickly avoid. And guys, I do have a course on how to start your own tax business. You can go check out any one of the videos that's on the YouTube channel in the description section. You'll see the link to the actual course to get that. Oh, before I go any further, guys, this is the Dollar Hour streaming live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. Again, it's Mr. Short Dollar. If you have to leave or come back, whatever, in the middle of the show, you can always go to the YouTube channel where we have over 900 videos talking about personal finance, business, entrepreneurship, and investing. But that's Mr. Short Dollar on YouTube. But again, feel free to call in tonight if you got any question pertaining to tax law changes or any tax question in particular. I see if I try my best to answer it for you. Our call-in number 678-740-9894. Again, that's 678-740-9894. Was that going on, Lab? I had to take that break, but was I run my mouth on something? I won't lose my train of thought. I know.
No, you were just.
Well, it's just that whole fraudulent piece. But just be careful with that, guys. Just be careful with that because every time Lab was right. There is no shortage of people that are posting. They do taxes. Come to us, and everybody got the same post because there's I'm 23 years in the game, so right now, hell, I'm doing grandkids taxes.
Right.
People that came to us in the early 2000s, their grandbabies working out, so they send them to us now. So I ain't tripping about trying to do that. I'm straight for being to go. We still take new clients on,
right?
But I don't have to go into all that stuff and trying to just get everybody. But you see the and it's not hating because I remember when I got in the game, I had to cut my teeth. Anybody doing the bullshit I did,
right?
To grow my business. But you see the same, advertisements, up to $6,000 in bank refunds, bank cards, that all kind of stuff. Everybody got the same thing. Cause there's only 5 or 6 banks nationwide
Right.
that fund income tax refunds.
Okay.
So everybody's offering the same products. Everybody
Right.
might have different softwares, right? So at the end of the day, Poochie can't get you nothing different than the other person. That makes sense,
Right. I get
right?
what you're saying.
As far as products that they can offer. Now you got different in terms of skill sets. Well, one person may be able to look for certain things, and you may be eligible for this, eligible for that. But most of the time, the average person is it's really in and out.
Okay.
Now you got somebody gonna lie on your stuff and find some kind of credit and all this stuff. That's some fraud stuff you don't even want to get into with that. But you got to be very, very careful of those particular things. But for the most part, you the average person with a job, house, kids, and stuff like that, the number gonna be the number.
Okay.
Right?
Okay.
And that's just how that is. And you have to be. That's what I'm saying. You have to be careful of that because a lot of times you deal with some of these fly by night people. Once tax season over, you get that letter come the summertime. You got your nice refund. You get that letter come the summertime. You hear that doo doo doo.
You can't reach him.
Doo doo doo. Go to the office. Nobody's there and all that kind of stuff. And now you don't know. And now you look like a lie because you like, well, I don't know what they did and everything like that. But it comes back to you.
Right. It's like your number. It's your social security number.
Exactly. So that person, if there was a scam, there was a scam. It don't make them different. That's what they do, right? And I just think a lot of times people don't take the time to be, use that due diligence.
Okay.
To make sure somebody's sharp.
I just want people to understand that this is not just you really understand and do this thing. You do this for a whole living, and it might be beneficial for them to listen to this because everybody has to file taxes. And then like we talked about 2020, everybody started a business. So, and if it's still going, you may want to know how this applies to you. So anyway.
Well, even to that point, Larry, that's why I think a lot of times folks have to be very, very cognizant of when we start talking about these kind of things. Listen, there's a lot of folks out here trying to do certain things. And it's one thing, you getting your house painted, somebody's doing some landscaping for you. And shit. We talk about, like I said, your personal information. Once that stuff get compromised, it's hell on earth trying to get that stuff straightened out.
Very much so.
Especially they did something to you. Especially they did something to you when they can impact you in regards to maybe took stuff out of your bank account or anything like that. You have to be very careful of it. Going up for them, son. Those kind of things you gotta be
very careful of.
Yeah. So and that's why I say you may not necessarily want to deal with your cheapest option.
And then your most high money back option, because there's always something tied to that. Sometimes you get what I'm saying. Like it can mess you up for a very long time to come.
Yeah,
people don't realize how far reaching the IRS is. They don't realize that. I don't think a lot of people realize. They may realize it because you had to hear the commercials all the time on the radio. IRS can stop your bank account and all that stuff, but they really can do a lot of stuff. They can prevent you from getting jobs. People don't realize that.
Well, see, the thing of it is as odd as it sounds, they have the IRS has a long reach, but the IRS is very, very stagnant in regards to how they move. So you don't get a 2024 call at 2024. You might get it in 25, depending on what it is.
Right.
Or you may get it late in 24. And by that time, penalties have accrued, interest has accrued, especially something wrong, you got a refund that you done spent and you weren't supposed to get it. Now you got to pay that refund back on top of what they deem you pay, plus any interest and penalties. And all the while you trying to figure out what's going on.
Right. You
may know about it, may not know about it, but that's the kind of how they operate. It ain't gonna come at your leisure.
Right.
When it comes, and when they come, it comes. And if any of you have ever had to deal with the IRS in terms of an audit, or if just had any kind of liability, it ain't the best thing to be dealing with. So it just it behooves you to make sure you stay on top of everything with that. 2024 brings tax law changes to premium tax credit, required minimum distributions, and that's in terms of retirements, distribution for people over 65, and a lot of different green tax credits. So there were a lot of different things that came up as far as tax credits that were available in 2023. So I just want to share with you guys, in essence, a few of those. But like I said again, feel free to give us a call, 740-9894 to any of them that, that could be applicable to you. One of the first ones is the income tax bracket adjustments. Once again, the tax brackets, eligibility thresholds for certain tax credits and deductions. The standard deduction has increased for the amount of inflation. So with the tax bracket changing, there is a possibility that you may, if you made more money, you may be on the hook for paying more in taxes. But there's kind of like a seesaw effect in regards to that, because the IRS, we base our country based on what we call a progressive tax system. What we mean by progressive tax system, as you increase, they try to compensate it in regards to it. So in essence, you may be on the hook to pay more money in taxes by the more money you make, but your standard deduction, the amount that, what you're looking at, the income you make, there's a standard deduction that the government will say they will deduct this, lower your income by this amount, because this may be what you need to live off of. However that need be. That's what your standard deduction is.
Okay.
Then once that's subtracted, then you got your adjusted gross, or i.e. your taxable income, right?
Okay.
So, that's before, you might have some credits in there,
Okay.
earned income, things like that. But again, you have that money that you made, your standard deduction, and, that amount, that's what the government is looking at. This pretty much what that person will need to live off of. Subtract that, that'll be your adjusted gross.
Do they adjust that?
No, it's a straight number.
Okay.
It's a straight number.
Like, this year, inflation went up, so this person needs this much more to live
Well,
off of.
well, that's what they'll increase that standard deduction.
Okay.
And typically, if you're and the standard deduction is set for each person, if you file in for 2023, it increased to 27,000 up from 25. Hit a household increased to 20,800 from 19,000. Filing single, 13,850 from 12,950, and married filing separate is 13,850 up from the 950. Because again, when you file in married filing separate, you're gonna be tax changes as a person being single. Mm-hmm. Guys, make sure y'all check out the video we have in regards to income taxes, prop tax, things like that, how those things are set up. So I did an in-depth video about that about a year and a half ago, breaking down the different taxes and how things are looked at from that perspective. But again, we start looking at the standard deduction. Mm-hmm. That's what the government gives, depending if you file it.
And let me ask you a question. I'm gonna ask the question the whole time.
That's cool.
Where do they come up with the 27,700 from 25,000? Because if you're looking at it, that's only $1,000 on each tax bracket, just give or take a little bit. And how do they come up with that number? Because some people may say, "Man, it cost me that."
Well, to your point, I don't have a calculator in front of me. I think maybe like that 1 or 2% increase for inflation. Mm-hmm. That's what that is. To your question you asked earlier, they just increasing that, per inflation.
Okay.
So that's what. Remember,
so will it go down once inflation go down?
No, I've never known to go down.
Oh, okay.
It always stay up, but that's why that is adjusted up to compensate for inflation.
Okay.
Because remember, theoretically, the money that you make, $50,000. If you're filing single, you're gonna subtract that $13,850 from that. And then that will be going to your taxable income.
Okay.
You get what I'm saying?
Yeah.
So those are that's how everything is deemed.
Okay.
If you have a number that's greater than that standard deduction, that's where you have the term itemized come in.
There we
where
go.
You can look at putting in your mortgage interest, property taxes, charitable donations, things like that. That's where you can itemize if your expenses that you spend out during the year is higher than that standard deduction, right? During the Trump era, what was that, 2017? That December 2017, oh God, I forgot the actual law, but Trump signed that into effect. They pretty much doubled all those numbers. So they didn't used to be this high.
Okay.
10 years ago. Okay. But that was one of the major laws that Trump had signed to effect then. But again, that's when you look at these numbers, they've increased due to inflation.
Okay.
So that's why anybody think standard deduction increase. But going what I was talking about a little bit before that. Those income tax brackets adjusted. So theoretically, could we get the question? These questions asked a lot of times. Do I get bigger refunds and stuff like that? It's possible, but remember, you're going to be taxed more. So if you made more money, it's possible you got taxed more. Mm-hmm. But in relation to that, your standard deductions increase. So it's kind of like you might have got they asked for more money, but also taking away more from you too.
Okay.
And everything. Will it be in a fair relation? maybe, maybe not, but it just is there, right? And that's what they try to do to kind of make sure there's some kind of compensatory help for you in regards to that.
Floor, so you won't just keep going to the bottom. They have a floor that you hit. You know what I'm saying? Like
Not necessarily.
A safety net, rather.
Well, not necessarily a floor. They just adjust it.
Okay.
It's just an adjustment. They ain't no now they got some caps on some of the credit in regards to what certain things, some of the credits that they give, in regards to how much you can be made to do this or how much they'll give. But in regards to that, they're just saying that, listen, we can tax you more on the more money you make, but we increase that standard deduction to give you a little bit more back, right?
Okay.
So, that makes sense.
It does, and I'll ask some more questions as we go because you was talking about itemized, and I guess we'll get to that rack, and I'm gonna ask some questions about that once we go and say, hey, dear mama, while we at it.
What's up, mom? What's going on?
Hey, mama.
What's going on with you?
You said about itemized. I know you probably already had it in there, so I'll let you get to that.
I don't know. If you got a question, go and ask about it.
Yeah, when you talking about itemized, you see a lot of people on social media, on the internet. Man, add your car that you drive to the store and take that receipt and the gas from that car and put it on your taxes, and you can get a tax credit for driving your car to the store every day. Stuff like that. You get what I'm saying? Like some of the stuff that really don't make sense, but they trying to make it seem like you do this, you gonna get more money back.
Well,
and I know that's part of itemized. Put your boat on your taxes. If you use your boat to go pick up some supplies for your store, and you take your boat down to the boat store, and you put a whole bunch of Cokes and stuff on it, that's basically a good delivery truck. Put that on your taxes.
Yeah, well, itemizing, just a quick explanation with that is, like I said, if your standard deduction they give you, if you have numbers that you wrote off with it, it's greater than that standard deduction, you're able to itemize. But with increasing those standard deductions, they took a lot of things that you could itemize away.
Okay.
Like especially moving expenses, casualty loss and stuff. All that stuff went away because they increased it. You still have the mortgage interest expense. You still have the property taxes. You still have your that's property tax, your personal property taxes, like your car tax and things like that. Some places changed in regards to how they tax that, because I know with Georgia we used to do the ad valorem, but now we just use that one sales tax, right? Maybe some parts of medical expenses, things like that, and the charitable donations. But it still has to be over that. When you start getting some of the things you saying, like with some of the vehicles, that may be business related with writing certain things off. But you got to be realistic about the main chunk that will allow folks to itemize would be mortgage interest and property taxes.
Okay.
If you don't have, again, we're talking about somebody single $13,000. Head of household, that means just claiming a dependent $20,000. So, if you don't have really at least half of that in mortgages and property tax, you're more likely ain't gonna be able to itemize.
Okay.
So they just kind of that's something to put in perspective with that. With doing it, and if you are able to itemize higher than that, you'll be able to reduce that taxable income get it to a smaller number because you have more things to write off.
Okay. I got what you're saying.
Excuse me. But the key thing is, what bites people in the butt with that kind of stuff is what you just said. You can write this and write that. They're writing every damn thing off with doing that. One of the things I do want to shed light on, a lot of times people, remember guys, you call in 678-740-9894. Again, that's 678-740-9894. I ain't put the number. I had the number set up in the TikTok, but they didn't get approved. Had a phone number in them. But one of the biggest things I do want to just give a quick tidbit when we start talking about tax law changes for 2024. Be very, very mindful of a situation when you're a business owner. You want to write everything off on your business tax return, because I see this every day during tax season. People want to buy a house, they want to buy a car, and they done wrote every damn thing off in their taxes, and they made decent wage with their business.
Right.
But now you're showing this massive loss out of your business, but now you can't get a mortgage loan.
Okay.
Or you can't get your car because you got this debt going from there, and it bites folks in their butt all the time. Because
people think of little stuff like that, right?
Well, that's why you gotta listen to Mr. Short Doll on YouTube.
That's right.
So you because far too often people look at, hey, I can do this and I can get this refund back, but they don't understand big picture wise how that stuff can impact them, right? So that's something to be very, very, very mindful of when you start, especially when you young in business. When I don't mean young, I ain't talking about age. I'm talking about experience in business. It's cool to have those options where you can't write stuff off, but there's also a responsibility you got to have to say, listen, I got a life too, and year 2 in, you done made some successes, and they go off. The typical mortgage company is gonna go off 2 years of tax returns, looking at those business tax returns if you're self-employed. And they probably want to look at it too if you got a job in along with it,
Right.
because they're gonna request electronic copies of their tax return too.
Right.
They don't see you saying you make $200,000, which theoretically you might have made, but if you writing all this stuff off and you just to show you made $180,000 loss, all this kind of stuff is negative. Nobody gonna give you a damn loan.
And why I make this? Why they won't give me a loan?
And here the funky part about that, you're gonna have to go you're gonna really have to go a whole nother year or two to kind of get it back leveled up, because they go off the average of 2 years, right? So whatever the total for 2022 and the total for 2023, divide that up and divide it by 24. That's what they're looking at as your monthly 24, and they look at that's your monthly income. So again, we start looking at that debt to income ratio with that. Hey man, that's what they going off of.
Right.
So if you sitting there got something in the negative, you either have to show this enormous amount 1 year, you're gonna get this big tax bill on, or you have to wait a whole another year after that, 2 more years to actually level off with that. And that's just something to kind of keep in mind. Especially if you have any kind of business. Don't be so hyped up about want to write everything off. Now if you spend it, you spend it. I got it. We just understand that how that impacts you big picture wise when you actually want to get things like a home or a car. You may have been making money and you may have been spending money. But when you start again want to get a funding, look at one side of it. Who's going to be able to give you who's going to give you a loan if you have a proven track record of losing money?
Right.
And then you want to go to these fly by night people and get a loan for your business. Now we're talking about 20-30% interest rates. Ain't gonna be good, right? So that's why you gotta make sure you subscribe to Mr. Short Dollar on YouTube so you can understand.
Get all the information you need.
Yeah, so you gotta understand what we're talking about and don't get lost or anything like that. Guys, call in. I know y'all got tax questions and stuff like that. Y'all listen to folks on damn YouTube. Getting y'all this damn advice, know what the hell they damn talking about. I heard some crazy shit, lab. I heard some crazy shit.
That's why I'm trying to ask you questions, because they say certain things and they make it convincing when they say it. You didn't delivered a bunch of stuff in your car, and says that's a delivery truck. So you take this and you add that to this, and you take this off and you write off and you get $52,000 back. You didn't pay for your car on this one tax return, and you're like, okay, they didn't say add that to this, and I'm gonna try it, and then we all messed up.
Well, so tax credit is a dollar amount that can be subtracted from your dollar bill after you claim your deductions. You can think of it as a coupon that you enter in that checkout when you buy something online, right? There are tons of tax credits available to claim depending on your filing status, dependents, financial situation, and more. And what we want to do is kind of talk about some ones that are newly refreshed. One of the most popular is the Earned Income Tax Credit. And the Earned Income Tax Credit is one of the most popular ones. It is set up to help low and middle income people. The maximum credit amounts have increased. And here's the thing, we're going to go over a couple things in regards to what they all changed to.
Okay.
Now, again, that Earned Income Tax Credit, that's one of the main tax credits a lot of people get, for lower incomes. What they do, they've increased the amounts for those adjusted gross limits. And again, it's the same thing we start talking about the people that's filing single head of household and widowers, and then there's a different section amount they're giving to people married filing jointly. So when you have Earned Income Tax Credit, the key things to remember, guys, there's a dollar amount if you're filing by yourself, if you're filing one dependent, two dependent, three dependent, right? That number varies, right? We know that, right? That number will vary. But but with a child tax credit, where you're getting a tax credit for dependents, you can only have two.
Okay.
You can have 4 kids in your tax returns. But if they're on age 17, you should get a child tax credit, right?
Right.
But only 2. But you got up to 3 of those that you can get the child tax use for Earned Income Credit.
Okay.
And that's gonna be based on your income.
Okay.
Child tax credit 2, Earned income credit 3
Okay.
for all dependents.
Okay.
Got to be under 17, or have some kind of maybe a disability
Okay.
where you can just say, okay, cool, they'll fall in line because you know they can be an adult with a disability and still fall in line with that. Okay. What I want to just go over some of you guys is the actual amount, max amount you can have for each one for the earned income tax credit. The max amount where it'll fade out would be for if you're, certainly if I want to go through all of these, but for zero it'd be 17,000. For somebody filing single head of household with 0 dependents, 17 grand. Married filing jointly, 24,000. It's a little bit more over that, guys, but 24,000. Married filing jointly. That means if you have any dependents, just you and a spouse or you by yourself. After you've made 17,000, you can't get it with nobody, right? After that, you can't get any earned income tax credit.
Okay.
Right? Anything below that, you're eligible for it. If you're a single head of household or a widower, you have one dependent. The cap income is 46,000, and then married filing jointly is 53,000. A little bit more than that, guys. Just keep in mind that's an estimated number. 2 dependents, 52,000. You filing single head of household, and then it's 59,000. You married filing jointly.
Okay.
Right, and that married filing jointly, that's combined income for you too. Right, and then for three plus dependents, 56,000 if you're single head of household, and 63,000 married filing jointly. Here's the key, guys. I want y'all to understand. Remember, it's a varying credit number. This is very, very important. It's a very credit number, right? Now, there's a range where you talk about from 0 to whatever number. But when I just gave those cap numbers, let's say for somebody head of household with one dependent, the cap to qualify for that credit is 46,000.
That's how much I can make that year.
Yeah, that's the most. Before you just
The most I can make.
Before you get an earned income tax credit, right? But here's the deal. That's for somebody single head of household with one dependent, right? Single head house with one dependent. That's the max you can make. But the max that they will give you for that credit is $3,995.
Okay.
But when you get to that 46,000 we just said, you're not going to get that.
Okay.
There's a sweet spot from 0 to 46 that they'll fall in line with.
Okay.
But right there, you're not going to get it. That makes sense?
It drops down.
Because it goes like this.
Oh, okay. It's on the
you know, yeah. So from that 0 to 46, that number is low, increase, and go back down,
Okay,
right?
I get
So
what
that's
you're
how that goes. So it's not like you can see it and say, "Well, I heard I'm head of house. I sort of get that." It's a varied amount by the income.
Okay.
Right. So that number.
So if I make 53,000, if I make 50,000 filing single head of household, and I got one dependent, I'm not gonna get the 33.
Well, you wouldn't even get that anyway. It just say you wouldn't get. Yeah, you're right. You wouldn't even be eligible for it. But you wouldn't even get that wouldn't even be an option if you get a 30. At that point, just say if somebody that's making $45,000, that credit's probably gonna be maybe $700.
Okay.
That they're gonna give them back.
Okay.
But it's an apex in between. Like I say, you have the curve going just like this, it's a sweet spot.
Right.
Let's say, damn, I usually had the numbers wrote down. That's why I was looking at it, but I didn't have that on me. I got in my other notes. I think that max range may be between $18,000 to $25,000 to qualify for that $3,900.
Okay.
You see what I'm saying?
I get what you're saying.
But that's how that goes. So, but that's a big myth. A lot of time when people dealing with taxes, they think that because I did it, this is what I should get. That's the max, but the max is only during the range from the lowest to the highest, right? So it's not. You know what near that.
You get the most amount right at the middle.
Yeah.
Right at the half tank mark.
Exactly, because just like you think about it, like in math, something we call it like a bell curve, where it goes up and goes down, like from that 0 to 46 here, and so in between, that's where that max, that 39.95, then it start decreasing outside that till it get back to that.
Okay.
And that's something that's very, very important. I think a lot of people understand because the max, even with 3 dependents, is $7,430. But again, that's $56,000 for somebody head a household with that. But remember, it's not at the 56. It's in between, going on that bell curve. That's what that.
Okay.
And so that's why a lot of times people can't tell because of it varies.
Okay.
It varies, right? The child tax credit will be the same, but that's just credit they give you for the dependents. What the child tax credit this year was it? $2,000, $3,000. I apologize. I can't call the top of my head. You let wrote on my damn notes. I've been adding all day. But the child tax credit stays the same. with it. If anybody knows off the top of the head, feel free to put it in the chat. With that, but definitely.
Let me look it up for us. So we want to be right, but we gonna be right because we always, we tell the truth. Let me look it up. But anyway, child tax. And this is on the 2023, right?
Yeah.
Okay.
Child tax credit. And remember, guys, that's for anybody under 17 years old, and that's the same thing that's gonna be applicable.
It says currently the child tax credit is worth up to $2,000 per qualifying child under age 17 for 2023.
Yeah, that's it. That's it.
Reduces taxes on dollar to dollar.
Okay, and Sex Red Bond just put it 2,000. Well, 2,000, but it went up. But here's the deal: and there's been discussion that Congress may change it, but it's just discussions. They have not stated they've discussed it, and that's kind of what. And there have been conversations in regards to telling people to hold off of filing a tax because it may come, but it may that number it's just a discussion. They have not said it yet because again, you got like you're saying, hey, we're gonna do this, but hell, everybody knows, tax filing starts next week, right? So, but that's been a discussion with doing it, but no, the dollar amount has not changed yet, right? So it's kind of something to keep in mind with doing it, and they do make changes like that during the tax season. Where you may have filed your taxes and you may be due more by a tax law that came during the middle of tax season. They give you opportunity to do an amend or change your return, so you can go and get that money back. Or the government may send you a check for that difference amount, or they may give you a credit on your next year tax filing to be able to do that. It's kind of what they did with those rebate recovery credits from a couple years back. Okay. If they sent you a check, if you didn't get a check, the stimulus checks, if you didn't get your stimulus check in the mail, they just gave it to you when you filed that next year taxes. So,
okay.
Excuse me, they'll work it out for you, how they do it with everything. But that's something to be kind of mindful of when you start talking about those earned income credits and child tax credit, which a lot of people with that lower middle income qualify for. But I just want people to kind of understand it's not a dollar, because people, what happens with us, man, and it's crazy. It just show you people know a lot of time what the hell they doing. They'll let somebody, well, for whatever reason, people get to claiming kids and doing this, that, and that. So people make deals where, okay, if I give you this, I need to get this back. The problem come up is, and I don't know where the hell people get their information from. How the hell do you know that this is going to be? So if I give you this, you need to bring this back. Why would you? This is the thing about it. Somebody let you claim a child. If I give you this child, I need you to bring me $3,000 back.
Right.
But in essence, that child maybe only made a $2,000 or maybe $600, depending on the age, impact.
Right.
But you let them, you put it on your return. You offer this person giving his money back, but it may not have made that kind of impact on your return.
Right.
And you don't know that, and you won't know it until it's input into the system.
Right.
Yeah. Because again, remember I told you before, it goes in that bell curve with earned income tax credit, right? The child tax credit with that, but if you're gonna turn around, it's Poochie speaking, okay. Why would if it's a $2,000 credit, why the hell would I give you $2,000 back?
Right.
Like
per child.
Yeah, but I'm saying if the $2,000, you just file me yourself.
Right.
If I'm gonna give it to you,
right,
that'll make sense. And again, that's still, remember, the credit is not. It's still going back depending if you owe. Like if you file your tax and you owe, the credit that's a refundable credit, so you'll get it back, but it's just gonna apply to what you owe.
Right, right.
So you may not get nothing out, but I just wipe stuff out, right? And I just think people just because they don't know what's going on. And,
you give them 3 kids. You like, I know you gonna get 10,000 back. I need to get 5,000 of that.
Well, I know right now, even with me talking, I'm losing people. Like, what the hell that mean? Whatever. And guys, feel free if I go too fast, or I say something you're not really familiar with. Feel free to hey Deontay, repeat that, or feel free to call in 678-740-9894. Feel free to do that, but you gotta be very careful with that kind of stuff. And I don't know where the hell people get their information from and all kind of stuff. It's amazing when I get those phone calls. People call me to ask me a question, but they telling me.
Okay.
You ask me, but you're telling me. But yeah, you this, that, and that. Yeah, you can get this, that, and that. No. But yeah, you heard about that. Well, yeah, I want to know. I'm calling to ask you this. But do you know this, that? No. What you doing? ask me, you tell them.
Right.
You know.
Right. Well, that's that I heard.
Yeah,
I heard.
and just want some kind of confirmation with doing it, but that's not the case, and that's why I say again, people got to be very, very careful who they dealing with during tax season, because again, especially with the day and age of data fraud and
Right.
security breaches,
Uh-huh.
you got to be careful, man, because you get anybody all your damn personal information, their system get hacked.
Oh, they got your stuff sitting on the
Yeah.
floor of their apartment. There's people in and out their apartment all day.
It happens all the time, though, lad.
Right.
Happens all the time, but people stuck on that refund and all that kind of stuff.
Or
you
the
know,
kids play on the computer that they use to do the taxes on.
yeah, because I be straight up with people, and this I love. And we've got a lot of customers just from doing this for the past 6 years on the YouTube channel. A lot of customers that came by, but man, don't call me with that damn how much you give me back shit.
Right.
No, I mean we're gonna do an outstanding job, but I don't get into that. I don't get into that. We're gonna do a great job. We're gonna get the best service possible. I promise that. You can check us out at Google reviews. I stand on my work.
Uh-huh.
I mean, 5-star ratings. And I know that one person a couple years back that gave us some bad rating.
Right.
And I think that's say a lot. I can stand on my work, but I don't do that. I don't do that. The whole hook you up and all that other kind of stuff like that. And that's why we've been in the game so long with doing it. And so I really want people to be very, very conscious about who they dealing with. They can make promise to them that ain't seen their stuff.
Right.
Because especially you dealing with the feds. I stay the hell away from them. Well, just like, where are the kids at for $500 joke? Okay, sexy red bone. Only get some of them $500 kids. Yeah.
I got 3 kids, $500 each.
Boy, I tell you. Guys, call in 678-740-9894. With tonight's show, we're talking about tax law change for 2024. New for 2024, residential clean energy credit and energy efficient home improvement credit. Tax year 2023 introduces some new tax credit that may encourage you to go green. For example, there's a residential clean energy credit for new installations and upgrades to renewable energy systems. So think of appliances like solar water heating system, solar electrical systems, small wind energy systems, and more. There's another new credit for clean energy home installations called the Energy Efficient Home Improvement Credit, available for up to 30% of the total cost paid for qualifying home improvements. That's right, up to 30%. And actually, I did a young lady's return last year. She had we was able to take advantage of that credit because she redid the whole crib. And I think that's pretty cool to get almost 30% back of that total cost because it's something you're going to do anyway.
Right.
But if you're looking at doing any kind of revamps or upgrades to your home like that, because you're really winning, because you're making that one-time investment, you're getting that credit back, plus your bills are going to go down.
Okay.
So stuff like that, the savings to kind of pay for themselves.
Right.
After a certain period of time,
that
anyway.
Energy efficient credit that she
Exactly.
Okay.
We're doing that because you went solar.
Right.
Around the whole crib
Right.
with the solar panels. And I thought it was pretty neat with doing it because I had read about them, but that was really my first time getting in depth with that and
I
stuff.
think they give you, and I'm not an expert. I just read a lot, and this may not be true. And I'm not finna spill out false tax information on Mr. Short Dollar. But don't they give you like credits if you replace your refrigerator and make it more?
Well, that's what I was
more
saying.
Energy efficient and
Yeah,
toilets and stuff like that. Am I correct?
Yeah, that's what I was just saying. They give credits in regards to that. So, energy efficient items.
Okay.
And they'll be listed. They'll be listed. When you buy them at the appliance stores.
Okay.
Now you better get it from Uncle Chuck's. Scratch and dent. Don't go no damn scratch and dent.
So go to the what they call this a place in Marietta where they sell the stuff to scratch and dents.
You go on that shit. Go up in Sanford and Son.
Right.
Try to get your ass some energy efficient shit.
And your water bill going up.
Hey, you plug that damn thing up, your whole damn house short out.
That is so true.
Your whole damn. You try to save money, you done blew the whole damn fuse box off the wall. Shit.
That is so true.
This shit.
But it happens all the time. We
Man.
laughing, but people do it all the time, folks.
Man, shit, boy. But definitely, man, you know, take advantage of it. So if there are opportunities to do that, now a lot of those items may come at a more higher price.
Right.
But depending on what you're looking at, like I said,
But the
typically,
tax credit is supposed to offset it, right? Like,
no, it ain't gonna offset. You gonna get 30% of it back. So
Okay.
you get 30% of it back. But typically, the thought process when you get those, it's kind of like those new washer and dryers now. Like the wash machines, like, you know, back in the day we had to get all the
900
detergent
gallons of
powder.
water.
Well, what with that, all the water you were using, all the damn detergent where you just put in a little cup of the liquid, and it's only using like a fraction of the water before. So you know, you may pay a little bit more money, but the savings in regards to what you're paying from a utility perspective, supply perspective, you get that
It
back.
shrinks
Yeah,
over time.
exactly. So
Okay.
you'll get that back in savings. Plus, you get the credit back for the purchase.
Okay, I get
so
what
it's kind of like now, if you were like, you know, one of those, I want my money now type, you don't even think like that.
Right.
But that's typically how a lot of credits outside of those refundable credits, that's typically how they work. Like you're gonna make it in regards to that kick that they give you then, which is gonna be a certain percentage. You ain't finna get half or half anything like that back. But you'll get that, but you'll see a lot of savings over time.
okay.
That, you know, okay, cool. You know, maybe a couple years in, it paid for itself.
Okay,
Right?
I
So
get what
with
you're
the
saying.
savings you got. So that's got a perspective you gotta have with dealing with it. But definitely that residential clean energy credit and energy efficient home improvement credit, something to think about. Especially when we start talking about any kind of upgrades to your home and stuff like that. We start, you know, from a solar perspective and things like that. Just kind of keep that in mind, guys, when you're doing it. You know, it may not matter to you not, but I know a lot of times people, when we start making upgrades to our home and changes like that and stuff like that, you don't think about it. But here, you got it.
Right.
So, and it usually costs a little bit more, the items, but not a lot more, you know, if it were to be uncomfortable. But it usually a little bit more expensive than your average items in regards to those appliances and things you have outside of stuff. Because even certain lighting systems and certain irrigation systems and stuff like that. But definitely like sort of those solar panels, items and stuff like that, you know, they're going to cost a little bit more
Okay.
with doing it. But again, with the tax credit, savings and credit that you'll spend, it usually kind of pay for itself over a certain period of time, right?
Okay.
And typically most of the time those salespeople, even though they salespeople, that kind of information usually is correct in regards they can let you know. They can look at your current bill, look at your current, you know, expenditure on, you know, your bills in regards to just your wattage you're using, the therm you be using for your gas and stuff. Those kind of things they can actually calculate and say, hey, this is what you're looking at, this is what you've been spending, this is what they can save you with making this one-time investment and everything. Let me look, man. I'm just running my damn mouth. I don't know if anybody's coming or not. Again, this is the Dollar Hour. I'm Deontay Burton, a.k.a. Mr. Short Dollar himself. Tonight's show, we're talking about tax law changes for 2024. I don't see nobody comment on TikTok. Six Redbone talking about her schemes. Tax schemes. Appreciate that. Anybody comment on Facebook anything?
No Facebook comments. They watching, but they ain't commenting.
Again, y'all feel free to call in 678-740-9894. Again, 678-740-9894. Another new tax credit, guys. We're talking about tax law changes for 2024. New credit is the clean vehicle tax credit. You can easily qualify for this credit if you purchased a new or used electric or hybrid vehicle in 2023. You may be able to claim up to $7,500 if you meet the income and vehicle requirements. Check out the full list of clean vehicle tax credit qualifications. And it's pretty easy to Google it, find out. But again, most of the time when people from a sales perspective, I have that information out there. But that's one of the biggest things I think is known probably in the next. What was the goal? Was the next 10 or 15 years they trying to make more majority electric cars?
Yeah, totally green.
Yeah.
I'm gonna throw something. You know, I drive a Versa. I ain't ashamed of it. Gets me point A, point B without no problems. But I drive a Versa, right? And every year I buy tags for my car. It's $20. Ever since I've had the car, I bought 2017.
You had about what?
Every time I get my tag, update my tags for my car. Ever since I've had the car,
$20.
$20.
Okay.
$20 every year. Renew my tag. $20.
I think that's everybody, lab.
Is it?
Yeah, because
No, because Slick pay a lot more, huh?
it ain't because we want saying usually with it say once you purchase it.
But there's nothing else added. I still get what I'm saying. There's nothing else added onto it.
think,
Cause like she paid like $100 and some for hers, and I've seen the tax bill.
You seen it in the past couple years.
Yeah, last
I'm
year.
tell you the reason why I say that. You know,
I bought one.
You know, the law changed about 3 years ago, and where they just charge you sales tax when you buy it at one time, and after then it's just like a $20 admin fee.
Well, I would
check on that.
Okay.
And I might be wrong. Yeah, that's what what's it? What Trading Code says is higher if you have a special tag. That changed years ago. Yeah, I think that's somewhere in that, but I think that's that 20. Trading Code said if you got a special tag, it's higher. But am I thinking right? I think it's supposed to be like maybe that 20. When you get it, you're gonna pay like that changed about 4 or 5 years ago.
Okay.
I rewind that when I was actually it was longer than that. Cause this was actually when I worked with county governments. But they usually do that one big charge then, but it's like a $20 some admin fee each year from that. I think so. And I think it's somewhere in that. But I think I ain't mean to bust your bubble with that like.
No, I'm still excited.
But that's why they usually do that. If I'm wrong with something like that, please somebody pull up the information for me to see with that and everything. I got some great people helping me in the chat and everything. Again, guys, right now we're streaming live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. We're talking about the new tax law change for 2024. Feel free to call in. What we got, Trey Nicole said, and I appreciate it. Like I pay $55 to $60 for my Falcons tag. Other than that, it's $20 for everybody. Okay. Yeah, so that's usually what it is. That's what I thought. And I forgot, like, if it changed probably, that wouldn't have changed this. It's a sales tax thing. But it used to be like you'll be paying that ad valorem property tax based off the car, but it's like they hit you that one big time.
One big time when you first
get it. When you first get your tag, when you first get it, they'll do it then. But then from that point, it's like a admin.
Oh, okay.
An admin fee.
I was doing something because I sure wasn't gonna get rid of that car. Now I'm gonna get rid of the car. Now I'm gonna buy me a new car. I was like, man, I ain't finna give me no new car and have to pay more of my tags every year.
Did you get the car new?
Yeah.
So you probably didn't feel it because you probably didn't feel it because you got it with the purchase of the car.
You're right. I got it brand new.
Yeah, so that's what I'm saying. What's Slick got?
Her tag is still over $100 every year.
Car costs more than the truck.
Car costs more than the truck, and she got that Audi, and she got that Tahoe.
No special tag.
I mean, on the tag she got, she got disability health care tag.
That may be. I don't know if that affects it.
Okay, I thought that would be make it less.
Shit, I don't know, Leo. I don't know. But that's why I think I don't know. That's something I need to do research on. That's a good question, but I think I'm a disabled military vet, so they get that to us free.
Oh, okay.
Yeah, they get it free, but I think that's just that's not a disability thing. That's just a veteran thing.
Okay.
Yeah, so I don't know with that, but I just thought that was one of them universal costs with that.
See, I'm looking on the motor vehicle fees and fines. It says that license plate registration or renewal. See, now why I go here? The license plate registration or renewal fees $20. Regular passenger car, light truck, pickup truck. Other vehicles vary according to motor vehicle schedule. So not all cars are $20. It varies.
So what's the minimum you saying? Well, I mean, what was the basis?
$20.
But what was the basis with the $20?
Let me down the winter something.
Sexy Redbone said that started around by 2018. That's what I thought. That's what I thought. Around by that time, I remember that started. Hell, that's kind of like when I was ready to leave county government, because I remember we was doing all that legislation and stuff back then when that was changing. There's a certain weight size of the car. What it say, guy? That clean.
Anyway, y'all need to look it up, research yourself. We move on.
But with that clean tax credit, that is something to look into, because again, they're looking at giving you $7,500 credit, which I think is pretty impactful for doing that. I just don't know necessarily. I don't necessarily know if the infrastructure is set up for the most part. If you have just like for just electric cars and things like that.
Right.
With doing it, I know they got some charging stations out there here and there at different places. I just don't know if it'd be advantageous for you still to even get it. How much Tesla costs? I ain't, I ain't no damn car person.
Depending on the model type.
I mean, pretty much of a 30, 40, 50 grand, 60 grand.
They start at 40.
40 grand. We're
They go
doing
all the way
that.
to 115, 120.
Gotcha. So that, that credit can be advantageous to you, and that's a max credit with the 7,500. So it'd probably be something smaller than that. We're doing it. So I guess if you're doing it, you got it. Maybe one of the things that could probably help you with doing it. But I do think that as technology innovation increases, those cars are going to get cheaper because more people are going to have to get them, and they're going to have more and more charging stations built around. With doing this, that price will go down. So
I mean, electric cars, electric vehicles. How much you say? $7,500.
up to that's max.
Yeah,
so,
see,
so it may not even get to that.
Right.
That's the cap.
Electric vehicles are very expensive. That's why you don't see so many of them on this road, because at one point they were talking about how expensive they were, and it's going to be hard to get everybody to transfer over to electrical vehicles when they cost so much. When they start you at 60,000, you get what I'm saying? And then you have so many gas vehicles that are used that you could just go purchase for a less amount of money. You get what I'm saying?
Gotcha.
So that's the variable that the legislation was talking about. How do we get people to go green and get these electrical vehicles when the cost of them cost so much, and they can go get a same size gas powered vehicle for $30,000 less.
Yeah.
And that's the problem that they're gonna run into. That's the problem they were talking about. Like, that's the problem they were talking about one time I was watching on C-SPAN. They was talking about, it's a great idea, but if I can pay $30,000 less for a car that runs by gas than the electrical car that starts at $60,000, I'm gonna go with the $30,000 car.
Technology is going to decrease the prices
Right.
with advances in doing that. Sexy Redbone said that you're starting at 40 grand at the auction, and there's a recall on many of them now. So that's interesting, and that's why I say I think as the years go by, the more and more people, just kind of like how it was with TVs,
Right.
and things like that. Certain when
I saw old commercial for a 4-mile TV.
Yeah.
4-mile TV, they was like $982. That was back in 81,
Well,
82.
you remember flat screens first came out, $3,000 to $4,000. Now
Right.
you get them for $100 to $200, right? So those kind of things, like I say, as technology increases, gets better, the price will drop on it. Again, we're talking about tax law change for 2024. 401k and IRA contribution increase limits. To keep up with inflation and the rising cost of living, 401k and IRA income contribution income limits have increased. If you have 401k, you can now contribute up to $22,500 in 2024. That's up from $2,500 from the tax year 2022. You can also contribute an additional $7,500 if you're over 50 to catch up with your retirement goals. If you have a traditional or Roth IRA, you can now contribute $6,500 in 2024, up from $500 from the tax year 2022. If you're over age 50, you can contribute an extra $1,000. Why is this so important, guys? One thing we gotta understand is that the whole Social Security thing is decreasing, and now we can start coming to that whole baby boomers that are getting ready to start retiring and stuff like that. The government is not going to, they prepping. We are really finna see right now the income of a lot of people not necessarily having pensions.
Right.
Outside of most of your actual government bodies, people work for federal, local, city, state governments. Most companies have 401ks. They don't have pensions out. Outside of maybe some of your large Fortune 500 companies, and they ain't even got enough.
They don't even contribute to that as much as they used to.
Exactly.
It used to be dollar for dollar when it first came out. Remember that?
Exactly. But what's happening is, let's be real. Because the onus has been on you to fund your retirement account, and you sitting there retired. Hey, I got $100 grand in there. How long would $100 grand last you? You're 60 years old, and then you haven't been doing that. So I think what's happening now, they looking at a lot of people need to catch up, but they had those caps on that. Because remember, what you are contributing to these funds outside of that will reduce your taxable income, especially going to a traditional account. It's going to reduce your taxable income. That's going back to what we were talking about, part of that outside of that standard deduction. But I think it's going to be real interesting to see how things fall out in the next 10, 15 years, because again, they're excuse me, the amount that people have been taking advantage of now is really going to show with doing it. And I think
If you talking about 10, 15 years, and you got Generation X coming. Generation X comes after the baby boomers, and that's us.
yeah, and I know damn well us have not been focused on retirement. I mean, that's just keeping it real. And I think people really don't start thinking about retirement till you hit 50. You think about it.
Mm-hmm.
But then you start really probably maybe sweating it once you hit maybe 55 to 60 with doing it and everything, how that goes. But, excuse me, the thing about it, just being realistic, I just say, you know, shit, how much time I got to actually look at it.
Right.
Because, you know, unless you're a damn magician or, you know, you want to go rob a bank, and you can't make the money come out. That's why I did a video about a year ago, how much money you need in retirement. I gave my whole blueprint. Check that out. Go to Mr. Short Dollar on YouTube. How much money you need in retirement. I get a whole blueprint on. If you have not been in a situation where you have been putting money in your retirement account, how to actually plan and what things you can do if you 45, 50, 55 years old and you know you just 10 to 15, 20 years out from retirement and you haven't been doing it, I gave my blueprint on what you could be doing in that short amount of time to actually help you in retirement with doing it. You know,
Right.
I mean, shit, it's coming.
Right.
One thing about it, we all gonna do what? Get older.
Get old.
You know what I'm saying?
Ain't no way around.
Exactly. So you can make shit comfortable for you, or you can keep stuff real rough.
Right.
So that's why definitely check out that vehicle. I mean, not the vehicle. This shit up here. Got that video when you get a chance. What I got in my notes here too. I said there the new deduction limits for traditional IRA contribution. You can take a deduction up to the limit $6,500 or $7,500 if you're over 50. If your spouse does not participate in an employee-sponsored retirement plan, if you do participate in an employee-sponsored retirement plan, then the deduction phases out as your income increases. And like I said, that's kind of what we always talk about, that varying scale in regards to how certain things fall into place. There are new income limits for Roth IRAs. Income limits that have increased for the tax year 2023. That being, again, it's 2024, but we're doing the taxes for the things that happened in 2023.
Right.
And they have different income limits with doing it. With actually giving people the amount of money they can contribute up to. So you can contribute to the limit if you make less than $138,000. If you single head a household, a reduced amount if it's between 138 to 153. So you still can contribute to it. And I think a lot of this stuff again is coming into play because we know baby boomers are retiring and they buy the chunk of that damn Social Security fund, and it's
about to be choked off.
It's gonna be choked up, but see, it's just more and more inevitable that it's gonna behoove you to have some kind of supplemental that retirement stuff together in a 401k
Right.
or a Roth.
I think they need to let people work and still get their Social Security if they're able to. That's the problem a lot of people have. They have the cap so low, and I know it's not a tax thing. This is something we're going to talk about later on this short talk. They have the cap so low on Social Security that you can make before they cut you off. They need to raise
16,000.
They need to raise that.
16,000.
Especially with the amount of money they say you need to live off of. They talking about $1 to $2 million now to survive off of after you retire,
I think,
and that's minimal.
yeah, and I think that number, we can look at a number like that, 16,000 is so small, but it got to be some kind of, that nerd brain of mine, there got to be some kind of logical reason why they came up to that number. In regards to if we increase it, we got to, you remember anytime you make changes to any time budgets or something like that, I can increase this, but I got to take away from this.
Right.
Things don't usually work like that. It's always some kind of thing somewhere else. I agree with you because that's a small amount of money to be getting, especially depending on, and everybody got a varied amount in regards to, what they get for Social Security. So you telling me to get my damn $800 check, I can't make more than whatever. If you get $2 or $3 grand a month, those just say you about, let's say $1,500-$1,600 a month. I said, okay, cool, doing it. Plus you might, most people that are actually doing it now, they're probably getting pensions. I see that a lot of times some of my older clients. So it's, money they got 3 or 4 different ways money coming in, right?
Right.
But if that's not the case, which I think is gonna be, especially with a lot of Gen X and younger.
Right.
Shit, that's just gonna be it. Whether we either got in from our 401k, and the funky part about the 401ks is what? That money's getting taxed coming out.
Right.
That's gonna be the BS of that, right? Because it was just pushed.
And it's at 45%, right?
Huh?
It's at it's when that comes out, it is not taxed at the regular rate that you get taxed at. It's taxed at a what's they call that?
No, ain't gonna be no capital gains.
Capital gains tax. Not capital gains tax.
Hell no. Ain't gonna. That's not your retirement.
Oh, okay. Tell me something. I just knew that was what's.
No, it's gonna be at the 25.
Okay.
But it ain't gonna be at the cap gains.
Okay.
No.
And that's not something I read. And I just assumed that.
No, that's a good question. Though.
Yeah.
That's a good question. But still, you still talking about 25%. Shit, you know what I'm saying? That's just like, hell, if I got $1,000, I'm getting $750 back. Like, shit, you know, so that's still a, you know,
right.
And you know, that counts in regards to you start looking at how you need your money and stuff. So those kind of things, you know, I think a lot of times people aren't prepared for. That's why I say a lot of times you can, guys, you got a traditional. Gonna convert that damn thing over to a Roth. Gonna hit that one-time hit now.
Right.
And just start building up, you know, so everything that's going in, if you're gonna tax it in, and you get all your distributions untaxed, because it does make a difference. And I learned that from a lot of my baby boomer OGs that are getting their money now. They're like getting a quarter of it taken out just because they retired. Like that's some bullshit, you know. So
they gonna get you one way.
Yeah. So you have to be mindful of that, right? With that said, guys, getting your mind wrapped around the latest tax updates can sometimes be overwhelming. Luckily, we've got a couple of answers to frequently asked questions, and one of the people asked a lot, you know, just kind of give a big summation of what we talked about so far this evening, where we talk about tax law changes for 2024. What are the changes for the year, for tax year 23? Majority of changes have to do with adjustments for inflation and introduction of new tax credit, residential energy credit. We, you know, gave you a couple specifics already. I always remember, guys, again, you know, tax brackets change. You may have to pay more in taxes, but theoretically the standard deductions increase as well. It may not have an impact on you and stuff like that. Earned income tax credit, the ceilings will increase in regards to the max amount, so that had increased. So just kind of keep that in mind. And you may have a situation, well, it may be good for you. It might be a situation where it went bad for you. You won't really know till you get all your data put in and stuff like that. But it's just something to be mindful of with that.
Slick said it was 38% was the rate for 401k. You have some stipulations, but this was the cost, I guess, when you take the money out your 401k, 38%.
That's usually withdrawal.
Withdrawal, yeah.
Withdrawal, depending on, I'm talking about like when you get 65 and they just give you regular distribution.
Okay.
Yeah, but they're gonna take the taxes out then.
Okay.
So you know you got the 25 plus the 10.
Okay.
And you like maybe an admin fee on stock. That way you get the 38. You see what I'm saying?
Right.
The 25 to 10% early withdrawal. But once you get the distributions, that shit coming in is getting taxed.
Right.
So it's just something to kind of keep in mind.
Okay.
A quarter of your money gone
every month.
every month.
Okay.
You know, or however when you taking it out, right?
Right.
You decide if you want monthly distributions or you want to put stuff like that. But it's just something to kind of keep in mind. I say, going to take your one-time hit, convert it to a Roth, going to pay the tax on that shit then. So you know everything that going, you know, everything going in gonna be taxed, but everything coming out
is yours.
Yeah, and it done accrued in there. You know, you don't have to pay nothing for the actual growth that the actual fund had. That makes sense.
Okay.
So that's just like I said, that was something I looked at, but I learned it. You know, my OGs them taught to me because they had hit 65 and they're like, man, this shit don't make no sense. You just give them the money.
Yeah.
You see what I'm saying? And this
Slick,
thing you don't think about.
we saw your post we saw your tag amount 78.92 plus $20 98.92 for her 2022 truck tag. So
I wonder what the 78.92 is.
she says $20 fee, registration fee, and annual ad valorem. But she paid $78.92 ad valorem. I guess the $20 admin fee, and that was the $98.92.
That's interesting. And I wonder is that
I
like,
know she paid over. I seen the tag receipt. I know it was over $100.
yeah. Mine usually around I get that 20, and it may be a reason. I don't know if it may be a truck or what. I don't know.
Because a truck, but do you think it's because of the year you buy the car?
I don't know, lad.
The
I
year,
don't know.
The year and make of the vehicle?
I don't know. I
Oh,
don't
okay.
know. I'm pretty sure it's some reason
Right.
with that, but that was the whole logic why they moved over to that sales tax
Oh, okay.
model. So you just hit you that one damn time
Uh-huh.
instead of each year you doing this. We're doing it, and it just changed the revenue that they were
It
getting.
may be because Slick paid off her car right away. She bought her car cash.
I don't think that got nothing to do
Oh,
with
okay.
it. It probably something to deal with the kind of car it is, truck, whatever. I don't know.
Okay.
But they ain't got nothing. They ain't really got nothing to do with that
Oh, okay.
because they don't know that.
Oh, okay.
Think about it. They
Yeah.
don't know.
Right.
You got your tag. You got a tag in your vehicle to operate your vehicle. We're just doing a
Right.
little quick tax lesson, guys. You pay the tag to operate your
the
vehicle.
vehicle.
They don't know if you own the damn thing or not.
Okay.
You see what I'm saying?
Right.
So, but they'll submit something like just like it's a lien, like a car paid off or whatever, so you can get the title
Mm-hmm.
of it and stuff like that. But I don't think they base it on that.
Okay.
I think it probably has something to do with the Vic, but I still don't know.
Okay.
What would cause that? 'Cause that's what be the thought process behind that. That's a good question, lad. I get funky when I can't figure shit out.
we gonna have that answer for the next for the next show.
When can I file my tax? 2023. Remember, guys, I told you tax season officially starts January 29th, Monday, January 29th, 2024. That's when the IRS start accepting returns from people. So again, you got people, even like us, like myself, we actually take returns and we're processed and we keep them in the queue, but we can't submit them to the IRS
To the
until
29th.
The 29th.
Okay.
Right.
Let me ask you a question about that. Say something. I saw somewhere, and you may have mentioned this on the last Short Dollar show. Me bringing my last check stub to you to file my taxes. Try to get it early.
Yeah, you always want to make sure you got your W-2s.
Okay.
I don't take no damn pay stubs.
Okay.
Because at the end of the day, the pay stub still missing personal information in regards to the tax ID number of the business. All the information in regards to some of the things if you've been putting money into insurance, or if you've been putting money, it may not be the actual accurate amount.
Right.
Insurance, certain secondary insurance plans, education, or just trying to think of things you may have been doing, health saving plans and stuff like that. All that may not necessarily be set up on that pay stub.
Okay.
So it just behooves you, because by law, the employer is supposed to make sure that you got your excuse me. The employer by law is supposed to make sure you got your W-2 by the 31st of January.
Okay.
So you supposed to got your W-2 and your 1099. All that stuff's supposed to be given to each employee or any contractor by the 31st of January.
Okay.
Also, the employer has to get that information to the IRS by the same amount of time also.
Okay.
So, shit, wait a week or two. I'm just saying,
Right.
because here's the deal, man. I'm going to be very honest with you. This is what I've seen a gazillion times over the years. I don't touch nothing with no pay stubs. Right?
Okay.
And best practices, they tell you don't do that.
Okay.
Right? Just send to prepare. They tell you don't do that. But here's the issue, lad. There may be something so important on there that tax information is filed. You get you a $3,000 refund. You click your heels, you're happy, da. Then you letter from the IRS 6-7 months later, say, hey, you were missing this particular credit because it was some shit I did, man. On mines about 15 years ago. God, what I don't remember what it was, something, but I didn't go off my pay stub with my W-2, but I missed it. And when my tax was here, I don't know. I think it was that's what it was. I had a job. There you go. I had a job. My job was giving me reimbursed daycare expenses,
Okay.
and there was a difference. Like the job might reimburse me $2,000, but I spent $5,000 on daycare.
Okay.
One, thank you. The information went on the pay I ain't had no damn pay stub anyway, but I just missed it. Long story short, I put in whatever I paid, and it got kicked back. Same thing, you might not have that itemized information listed on the pay stub, which
Okay.
is W-2. It'll be in that block 12 or 14, whatever it is. You missed that. Anyway, I had got a refund for a certain amount. They sent me a letter. They wanted like $5,000-$6,000 back because I was going to owe but I got a refund on top of it.
Right.
This stuff happens, right?
Right.
So I say that to say, wait that little extra couple weeks to get all the stuff that you need.
Because they can't file till the 29th anyway.
Exactly.
Right.
Exactly. So you need to kind of make sure, exactly what they, you know what I'm saying. You might be in a particular thing that you're looking at it being hold on one second. You in your mind, you got to rush. You can't wait anything. I need my money and stuff like that. That shit can cause your ass about a year long damn headache.
Right.
Because you got some money you weren't supposed to get. If that makes sense. So just kind of take that in consideration. Well, look, man, I appreciate everybody calling in tonight with all your questions and everything, man. But I hope that Eric, we gave you guys some good information to help you with this tax season. I got a couple more videos to help you guys out. I put out videos in regards to income tax fraud or income tax audit triggers, things you can, some crafted things you might be able to do with your actual tax refund for this upcoming tax year. Got a couple more videos coming out, but guys, make sure you go, and I appreciate whatever platform that you've been looking at the show on, Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. But remember, the main hub is the Mr. Short Dollar YouTube channel. You can Google Mr. Short Dollar. Go to the YouTube channel, subscribe to the YouTube channel, take advantage of all the great information that's on the YouTube channel. Definitely go there, guys. Over 900 videos on the YouTube channel. We've been kicking it strong. We're going to keep kicking it stronger. Also, guys, I have videos listed, how to fill out a Schedule A, how to fill out a Schedule B, how to fill out a Schedule C. Different forms, okay? How to fill out a 1099 NEC. All that information there. Hell, I even got videos on how to fill out a W-4 or W-2. Not a the W-4, even with your holding sheet. A lot of great information there. Plus, we got an active grant playlist. If you guys entrepreneurs, business owners, and you need maybe some financial assistance, we got an active grant playlist to have over 150 grant opportunities for you guys to take advantage of. So definitely, again, go to Mr. Short Dollar on YouTube. Subscribe to the channel. Take advantage of the great information there. I want to tell all you guys from the bottom of my heart, I love you guys. I appreciate all the love and support. The channel growing. We're doing well as always. We're going to knock 2024 out the box. Take care of yourself, guys. Have a happy and safe weekend. And I'll talk with you soon.